Here's some buys. One, AMD. Listen, man, it wasn't that long ago people were making fun of me on AMD stock, right? Because I was down, what was I down in AMD? $50,000, $70,000, $75,000, something like that. It was a pretty big number, right? And now I'm green $15,000 in AMD, just like that, right? That's how fast things can switch in this market. So AMD remains a buy here. I know it's exploded upside, but keep in mind, AMD, we got MI350 coming this summer. Wait till you start to see the numbers around that, and then the excitement and hype that builds. And then we really start to have fun in 2026, because that's when we start MI400 production, right? And as long as that goes well and that goes smooth, just wait to see those numbers. And Lisa Su and the team, they've been building toward this moment that we're about to enter into. We're not even in the moment yet. We're about to start to enter the moment, and then things are going to really get exciting in 26 and beyond. So AMD, I don't want to speak too much about it because I did a full super in-depth video 7 days ago here on the channel. If you didn't get the chance to watch that one, watch that video. AMD just changed everything. Trust me, if you care anything about AMD stock, it is well worth it. Well worth it, right? Now, in regards to AMD, remember I just mentioned a moment ago I was down big on that position, right? And now we're up $15,000 just like that, right? Keep in mind, and this is the thing you've got to understand about stocks and being a long-term investor. Quite often, you're going to go down in a position, and there's no shame in it. The only people that have shame in it don't understand the game, right? As a long-term investor, I never have shame about going down in a position short-term. The fact that I was down $50,000 or $70,000, $80,000, whatever it was a month and a week ago on AMD, it means nothing to me. Absolutely nothing, because it's a newer position, right? And I believe it has massive upside over the next few years. And so if you look at the public count in many of my best stocks, keep in mind, I think every single one of them I was down on at some point in time. Palantir I was down on. Elf, I was down on that. Meta, I was down significantly, even several years after I had started my initial position, if you look at where the stock went to in 2022 and that shocking fall all the way to $88 a share, right? Amazon I was down on. SoFi I was down on. Revolve I was down on. Celsius I was down on. So the fact that you go down in a position short-term means absolutely nothing. If you're down a few weeks or a few months after you buy a position, clap. Be happy about it. If anything, because that means you got more of an opportunity to continue to buy that stock and load the boat on that stock. So, I could have freaked out on Palantir when I went down at first and I missed out on 1,600% gain. Oh, and let's not forget the stock I made ridiculous sums of money on that I don't own anymore, right? I was down big on Tesla back in the day. I was down big. Initially, that first, 6 to 12 months that I first started buying Tesla, I was down big. I think there was a point I was down 20 or 30% on Tesla. It was ugly, right? I was getting trolled left and right, which is very funny because I got trolled for buying Tesla and then I got trolled for selling Tesla, which is quite interesting, right? It's like you can't win. You get trolled either way, right? And people make fun of you and it's like, dude, I just care about the money, right? But anyways, do whatever makes you feel good, but it's about the money. And then do we not understand this game? But Tesla was down big on. And then I still made, stupid money in that stock, right? Just ridiculous sums of money. At the end of the day, if you go down big on a position early, just be happy. That's about it. Stock number 2 of these 3 stocks is Elf Beauty. Elf remains a huge buy. We're up massively, obviously, on this stock in the public count, up 959%. I actually started some positions back in kind of that March, April timeframe in some other portfolios as well, which I'm very happy about. But, Elf remains a buy. It's at $77 a share. I know it's come back a lot from where it was, but this stock has a long way to go. And remember, it wasn't that long ago, Elf was $200 a share, right? Listen, this company's legendary. Now, people want to give up on it because they missed last quarter by 2 cents. Keep in mind, if we go back before that, they've had nothing but beats and beats and beats on EPS. That's a legendary run. And then look at revenue. Never missed. Even in the latest quarter, still never missed. That's a legendary run there, right? And then we go back before that. Literally, they haven't missed on revenue in years. How many companies can you say over the last 5 years they just come in and beat revenue? Like Elf. And then as far as EPS, you got a miss there. But it was a little teeny baby miss. That was 2 cents. And that was back in 2020. So Elf is a legendary company in terms of coming in and beating their numbers, right? Additionally, look where this company's revenues had trended. Look, we're looking at 1000xstocks.com, our charts feature, right? That's legendary, man. Like, how many companies can do that? Now, analysts think it's going to be a rough next year and a half in regards to Elf. And to them, I say, because of what? Well, like, what's going to cause Elf to have a rough next couple of years, right? Let's think here. They're continuing to get expansion in the United States. Their sell-through is incredible, right? International is still early days in regards to their expansion international, and some of their growth rates in the international markets are off the charts, ridiculous. So what do we have to go off of? The tariff issue, if we want to call it that, Terang's already addressed how they're going to get around all that. What do you got to go off of? You got nothing. Yeah, it's just like throwing darts at a dartboard. Like, oh, we think it might be a tough next couple of years for Elf. Based on what? You got nothing. You got nothing, right? So at the end of the day, like, Elf sets up very well. And also, keep in mind, we're about to go through an intense profitability cycle that's coming in Elf, right? Where Elf really over the past couple of years had really just been focused on, really just seems like focused on just revenue. Growth, right? I think now we're going to be talking about a more disciplined revenue growth number. So those like 70, 80% revenue numbers, we don't need to do that. If Elf can just grow 15, 20%, I think that earnings per share is going to skyrocket for this company. And I think what analysts have kind of laid out here for earnings per share, I think that's actually pretty dang accurate. We're going to see Elf's profitability go to levels that we've never seen before. And keep in mind, Elf's only a $4 billion market cap. Next one up here, stock number 3 of 3 is HNST. This one remains a great buy. I mean, you look at a company that's been executing on the highest level of just about any company, never mind small caps. It's Honest. Their last quarter was insane. And I spoke about Honest in this video I did 5 days ago, top 3 best stocks to buy under $15. I want to give you guys kind of a cheap one there, like, $5 stock that I think is going to be $10 by the end of this year, right? Now, here's the deal, man. We're building brick by brick. We're building brick by brick. To build great portfolios, it takes time. It takes years. To build a truly great portfolio, it takes years of building that portfolio and building that portfolio and building the portfolio. And you want to build like building a brick wall, right? You want it to be strong, that it stays up for decades to go in the future. No one, at least I hope no one builds a brick wall like this. No one builds a brick wall to have it fall down a year later or 5 years later or 10 years later. When somebody goes to build a brick wall, they're thinking that brick wall is going to be there for literally decades, centuries to go in the future, right? Like, it's going to be potentially hundreds of years before that brick wall falls down, right? Or starts to crumble. And that's the way you got to think about your portfolio. You got to build such a strong portfolio, brick by brick, year after year, that it gets through whatever. And so if you look at what I've been fortunate enough to build in the public account, for instance, right? It's just such a great example of how you build a great portfolio brick by brick. That portfolio is almost, I think, 8 years old now at this point in time, right? Built it from nothing all the way to what it is today, where it's $3.2 million plus portfolio. And the public account, the private group has been able to see every single move we've made throughout the years, right? And including this Friday, they'll get to see the moves again, and next Friday as well. And every single buy and sell that goes on in there, they get to see it, right? And that's how you properly build a portfolio. You got to think like, I'm thinking so far into the future in regards to making sure I build this portfolio as strong as possible. So it gets through what we just went through. It gets through Rona. It gets through the next great financial crisis. It gets through all those things, makes it out to the other side, and then coming out, I want to make sure I build a portfolio so strong that it can weather the storms, right? And it gets through those tough times when the S&P 500 goes down 20%, 30%, 50%, whatever, right? And I want to position the portfolio that when we go through those bull cycles, right, it just goes through some explosive growth and it far exceeds the returns of like the S&P 500 or something like that, right? Because you got to keep in mind, like most of the time we're in a bull market. Like we're not in a bear market most of the time. You go through bear markets from time to time. You go through crashes, corrections, that happens. But most of the time you're just in an upward market that just goes higher and higher and higher. And you've got to make sure you're positioning yourself to capitalize the best way possible in regards to those markets. Because, once they're gone, you can't get them back.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
AMD to sell ZT Systems data center infrastructure manufacturing unit to Sanmina, I hope I pronounced it right, Sanmina for $3 billion. So AMD to sell ZT Systems U.S. headquartered data center infrastructure manufacturing business to Sanmina for $3 billion in cash and stock. As part of the transaction, Sanmina becomes a preferred new product introduction (NPI) manufacturing partner for AMD Cloud Rack and cluster scale AI solutions. Deal values include a contingent payment of $450 million. AMD retains ZT Systems rack scale AI solutions design and customer enablement expertise to accelerate quality and time to deployment for cloud customers. So, people were confused when this deal first came out. They're like, wait, AMD paid $5 billion for ZT Systems. Now they're selling ZT Systems $3 billion. No. They're just selling the manufacturing side of ZT Systems. So they're keeping the part that they actually want, which is the asset light side of the business, which is really the employees, the IP, right? All the patents and things like that, right? And all the know-how to actually do this. So it puts them on a much better, footing to compete with NVIDIA over the coming years. Now, the thing that with the ZT manufacturing side of the business, if they kept that, it would potentially slowly move AMD into more of a asset-heavy business, which was a kind of a fear from a lot of shareholders out there of like, are we going the route of Intel and becoming more asset-heavy? Because when you think about Intel's tried to play this kind of sweet spot of being like asset-heavy, but also they want to try to design their own chips and do all those sorts of things. You got to be one or the other in this space. In semiconductors, you either got to be a TSMC and you got to say, we don't care about creating our own chips and doing all that. We want to make the chips for everybody in the world, and we're going to do it better than anybody else can do it. We're going to outcompete them. We're going to be more cost effective, and your chips are going to be perfect every time, right? That's what TSMC focuses on. You look at other semiconductor companies like an AMD or Cirrus Logic, a company I used to own many, many years ago, or Skyworks Solutions, right? They are more like design houses. They're going to design chips for whatever specific applications they're trying to design these chips for, which keeps them asset light. Their specialty is their workforce and their patents and their relationships. That's what makes those companies special. Not the fact that they could manufacture, 100 million chips. Cirrus Logic, back when I owned that company back in the day, they were an audio company that made the audio chips, and I'm pretty sure they still do nowadays, for iPhones, right, and iPads and things like that. And it was a great growth vector for the company as iPhone was growing bigger and bigger over the years, and iPad back in the day, right? And so Cirrus Logic was a very successful investment of mine. But all they did was basically they just had a great relationship with Apple, and they would design all these audio chips to do exactly what Apple wanted. And much of their workforce was like dedicated toward Apple, right? And they had a lot of great patents in the space and things like that. And so AMD kind of does a similar thing, just obviously in a whole different marketplace than somebody like a Cirrus Logic or a Skyworks Solutions or somebody like that, right? And so they don't want to be asset heavy. They don't want to try to play that sweet spot of like, we're going to be a manufacturer of certain things and we're going to be a designer. They want to just focus on what they want to focus on, right? And so when I say you got to be one or the other, you either got to be an Amazon or you got to be a Shopify. Shopify many years ago, back in like 2021, 2022, they were trying to play this game of like being an in-between, and they very quickly learned, well, we can't play that game because the stock went all the way down to $25. $25. Look at Shopify today, it's well over $100 a share, right? Amazon decided many years ago that they were going to go asset heavy, right? Like, we're going to have massive amounts of warehouses all over the world. We're going to have massive amounts of planes flying all over. We're going to have massive amounts of delivery trucks. We're going to have the biggest data centers in the world, the biggest cloud infrastructure in the world with AWS, it's all asset heavy. It's extremely expensive, but you can't compete with Amazon, right? And then Shopify is like, we're going to compete in a different space, but we're going to be asset light. And so if you look at Shopify, what makes Shopify special is its software. It's a kind of a SaaS play, right? What makes them special is their workforce, right? Their relationships with countless small companies, medium-sized companies, and even a lot of large companies as well. And so that's the difference, right? And so when I look at AMD, you got to understand, now I'm green in the stock up $7,900. This is still a strong buy, man. Like AMD is still a strong buy here today. When you look at where this company's headed over the next several years, the way Lisa Su is positioning this company, there's no question that this company is still a strong buy today. And so, is it up a lot from the lows it was, a month and a half ago? Sure. But at the end of the day, I look at this stock over the next 3 years and I see a stock that, I don't think it's going to be even remotely close to $100 a share, which is where it's been trading recently, right? 114, 117, those are all joke prices, in my opinion, compared to where this company's going long term. So, yeah, good deal by AMD. Happy overall. I can't complain. About that, okay? Next up here, I got some good news for EL shareholders, and then we'll get into some good news for Cake shareholders. So, EL, by the way, Estee Lauder, this is a little bit of a misunderstood stock. A lot of people don't quite understand this one, and I just want to take a moment so you can understand this. Estee Lauder owns many of the most successful high-end brands in perfume, beauty products, makeup, cosmetics, those sorts of things, okay? And so I'll just show you some of the brands that they own here, right? And I understand like 90% of the people that watch my channel are men, so like probably 10% of the population actually understands these products or knows these products, unless you're a man who has bought makeup for your wife or your girlfriend or something like that in the past, or daughters or something, right? But they own a ton of different high-end brands. And go into a Nordstrom sometime, and you're going to see a Nordstrom's is loaded with these sorts of brands, right? And you can go into basically any major makeup store and you'll see their products. But a lot of them compete on the higher end. La Mer, for instance, very high end. I mean, we're talking about that's a moisturizer that is, like $600 for a 3-ounce bottle. Like, where there's different price points. And you might say, who pays that? People that care about their skin pay that have money, man. MAC, you look at, they're only really like, we can call it more affordable brand is The Ordinary, right? Too Faced has one of the top mascara products literally in the world. Now, if not the top, right? Now, you got to understand in regards to this company, they're doing mass layoffs right now, mass cost-cutting measures, and basically they're resetting the entire business model with a whole new cost profile moving forward. So when you think about the SG&A of this company, it's going to be monumentally different in 2026 and 2027 than it was in 2024, 2023, in past years. Okay, so they're resetting the entire cost profile of the business, which is going to reset the margin profile as well. And if you're wondering, is it going to reset it higher or lower? It's going to be higher. And the question is, how high? It's going to be substantially higher. When you look at how many thousands of employees are cutting, it's very, very substantial here. Now, in my opinion, here's how this game is going to play out, okay? So what I believe is going to happen here is revenue growth is going to start to go back up in the second half of this year. This year. I'm not talking 3 years from now, 5 years. This year. I think we're going to start to see revenue start to increase again in the second half of the year. And that's going to keep increasing all the way through into 2027. So 2026 is going to be another major reacceleration of revenue growth into 2027 as well. Okay, so 2026 and 27. Then we're going to additionally see margins go up substantially. When I say margins, I'm talking about gross margin. I'm also talking about operating margin. I'm also talking about net margin. Those are all three different margins, okay? And so we're going to see that, in my opinion, starting in the second half of this year. Not 5 years from now, not 3 years from now, starting in the second half of this year. And then you're going to really see it accelerate in 2026 and 2027. It's going to be insane. And we're going to see an earnings per share explosion in 2026 and 2027 for this company. Like, it's not even going to be on the same level. It's going to be ridiculous. People are going to be shocked by the earnings per share that starts pouring in this company in 26 and 27. They'll be like, what the heck? And so I have even more good news for EL shareholders. Here it is, okay? Listen to this. This is big. Michael Burry, the man who got so famous from The Big Short, right? Very, very famous from that. Michael Burry did something very interesting. In the first quarter of the year, now first quarter is January, February, March, okay? He sold his entire portfolio. He bought a ridiculous amount of put options on NVIDIA stock and China stocks. And he purchased one stock out of the thousands of stocks he could have bought. What's the one stock he buys? Estee Lauder. He purchased 100,000 shares of Estee Lauder. And I think he already had 100,000, so he might have 200,000 out. I'm not 100% sure on that, but I think he did, if I recall. Like, I got a lot going on up here, okay? Now, this is fascinating because here's the deal, okay? If Michael Burry bought those puts on NVIDIA in, let's say, January, February, oh my gosh. And let's say he cashed out in April, he had to make crazy money on those put options, right? Same thing with China stocks as well. Like he had to cash out with some crazy profits if he did that, right? Now, if he's still holding those puts, he's got destroyed on them. But as long as he got out in those first few weeks of April, which we can't see that data, obviously because the quarter ends in March, if he sold those in those first few weeks of April, oh my gosh, when the VIX was spiking like insane and NVIDIA stock was crashing, the amount of money he would have made would have been ridiculous. Like he would have easily tripled, quadrupled, if not 10x his money in that particular time frame. It just depends on his timing, right? But once again, like for him to buy the only stock he sees as attractive is Estee Lauder, I think that says pretty good things about where Estee Lauder's future is going here, right? Now, a great pair investment out there, and I've been talking about this one for a while, is buying EL stock and buying ELF stock. And if you're wondering, does this still work? Yep, still works. And I posted the entire, which is another reason why you want to follow me on X, because sometimes I'll just post random stuff. I actually posted the entire public account on X, on Friday, right? And this is a great pair investment, man. You buy a EL, you buy ELF, and then you get the ELF exposure, which is exposure to the masses, low dollar amounts. Like ELF's products are usually $5-10, right? And then you get exposure to the high end, which EL owns tons of the high end. They got a huge market share in the high end business, right? Which is really selling products that are really $50 plus. And a lot of EL products go well over $100, right? That's a great pair investment, in my opinion, on two beaten down dog stocks that I think are going to perform very well for the next many years, right? So just my 2 cents, okay? Alrighty, next up here, let's get into some good news for, before cake. I do want to mention something in regards to Wynn Resorts. For any Wynn shareholders, Wynn got good news today too. You know what the good news is? They're exiting the bidding process or they're not interested in doing the New York City property. Listen, New York City property could be great, but New York City does not appreciate what a property like Wynn would do. My opinion is they think they're too good. My opinion. New York City thinks they're too good for the Wynn. Making a big mistake. Big mistake. Like Wynn is such a match made in heaven, man. To have a Wynn in Manhattan, crazy. Huge loss for New York City, not a huge loss for Wynn. Like Wynn's got so much land all over the place. They got other countries they can do deals with. They're fine. But anyways, that's good news because Wynn was going to spend a fortune on that, and I don't know if New York would allow them to even make any money. Like New York probably would have just robbed them blind with tax dollars. So, anyways, my 2 cents on regards to that. Okay, next up, cake. So cake, I went to cake. The Summerlin location back on Friday night. Was there about 8:30. Place was jam-packed. Kitchen was busy. The outside and the inside, jam-packed, man. Great to see. They're working back there, man. They're working. Additionally, we had a North Italia and a Flower Child open up here in Vegas. It was a few months ago now at this point in time, okay? And I wanted to see how reviews are doing for both of those locations. They're in Henderson, which is basically just a nice suburb of Las Vegas. And North Italia has 381 reviews now, gets a 4.6 stars on OpenTable, so great to see. And then the Flower Child has a 4.5 stars, 129 reviews there for the Flower Child. So they get phenomenal reviews because the food's delicious. The food's delicious at those places. Absolutely phenomenal. It's different than the Cheesecake Factory. The Cheesecake Factory makes very okay food, is the way I would describe it. Like Cheesecake Factory gets a 3.5 stars, right? North Italia and Flower Child make great food. And so, like, before I even owned Cake Stock, I went to North Italia, I went to Flower Child, and I thought they were just like really well-run mom and pop restaurants that just had a lot of money behind them and to build these locations. I didn't even realize they were built by Cake at first. And then when I found out that, I was like, oh my gosh, like they're operating on a different level than kind of, the Cheesecake Factory itself. Like I challenge you guys, go to North Italia sometime, go to Flower Child sometime. Flower Child's phenomenal. Flower Child's more in that, we can call it $10 to $15 bracket. North Italia is more $20 plus for an entree, but both of them are absolutely delicious. Flower Child, super healthy as well, right? And in regards to cake stock, listen, this stock's still a buy. Looking at the forward P of stock, thinking about the growth rates this company's going to have for the next number of years, thinking about how many expansion opportunities they have for North Italia and Flower Child over the next decade, and then thinking about their other concepts coming behind those, like, it's a banger, man. It's an absolute banger of a stock. Pays me the dividends every quarter as well. So I get to make money in the stock for just holding the stock, and then I make money for all the dividends they pay. It's beautiful. It's beautiful, man. And every time I get to go to a North Italia or a Cheesecake Factory or a Flower Child or a Blanco, man, I feel like I get to eat for free because they pay me out so much in dividends and I make so much on the stock. It's like beautiful. I get to go to all these nice restaurants for free, man. It's the life, okay?